Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, October the 6th, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, let's start off looking at the Dow Jones Industrial Average. This one was up for the day. Markets in the U.S. closed in split fashion, with the NASDAQ down and the Dow Jones was up. What you'll notice here, basically what you're seeing is a continuation of that bearish divergence where you're moving higher on the closes, but the slow stodge is not confirming that, not yet at least. You've already broken down once from that, and now you're doing it again. We'll see how it forms here. The main thing is it's overextended. This entire run here is fake. I'm going to show you how I know that, well, I'll get to that in a second. I'm going to go over these U.S. charts and show you every single one of these have done the exact same thing with the same flaws, and that's always a telltale sign of a fool's rally that you want to short into. You do not want to be a buyer of it. And again, with the Fed now finishing their buying today, was their last scheduled purchase, you have no more reason for the bulls to anticipate any move to the upside other than the hope that the Fed will then do something in the future to stoke prices again. At the same time, I think it would be we'd be remiss to ignore the fact of what's going on in Europe. The problems are getting worse. Today, Fitch downgraded Ireland. So those situations are still developing every single week. We're hearing more news on that, and it's not going away. Quick look here at the rest of the markets, and then we'll show you how we know that this move right here is absolutely fictitious. One more item to note, I didn't cover this yesterday, I got some questions on it. You saw an increase of volume on yesterday's activity, a decrease again today, but you did see an increase of buying yesterday. So the question was, is this now turning into a bull market? The answer to that question is no, it can't be done that way. Once you create the foundation, and the foundation is this earliest time period here, if it was just on a low volume situation, you could justify it by saying, okay, if volume increased, then it would be something substantial. In this case, it's actually not that way because of all these gaps. This means that this entire foundation that you're building upon is flawed, and it's going to pull back down and fill that. So anything that you build top of it, even if high volume now were to come into play, it wouldn't matter. And on top of that, you can see that it's not just my opinion here. If you go back here and look at your fool's rally that happened back here before the flash crash, you'll notice you started seeing an increase of buy volume on that towards a peak there. So again, it's not, it doesn't work that way. Volume has to come into play at this stage of the game in order for it to be true. Okay, and it did not, and therefore it will not. Okay, quick look here at the NASDAQ. This is the biggest problematic chart I can find out there right now. It's absolutely horrendous. And back about, I don't know, 4 or 5 months ago, we were looking at the NASDAQ as being the strongest chart out there. Now it's the weakest. One of the actual stronger charts is the small caps, which is insane as well. But again, we're seeing this entire move right here as being fictitious. We expect the counter trend bounce due to the oversold condition of the slow start. You got the counter trend bounce, you start shorting it there, you will leg into it or scale into it, however you want to refer to it. As you go higher, that would make perfect sense to me, as this move is not true, and I'll show you how I know that in a moment. Again, the same conditions here. The rising price activity is on the move to the upside, but the slow start is rolling over here. This would be a bearish divergence, and of course something I want to short. Okay, here we are looking at the oil chart. This one's on a tear to the upside, and it will probably continue due to the devaluation of the dollars. You have a currency war brewing in the distance there, so keep an eye on that. What you're seeing happen to gold, you can expect to happen to the oil as well. These are commodities that are going to be propelled higher as the dollars get totally debased. The main thing here is I see that effect happening to currencies. I do not see it as propping up the world markets. Okay, so there's a difference there. You got to take into account all the things that are in play and say, okay, this one will affect this, this one will affect this one will not be able to defend against, for example, that the currency situation here is not going to change the fact that you're going to have a depression. People are not going to be able to go buy. The money that they have is going to be worth less. It will cost them more to spend. So how are they going to then go to Nike and buy something? It just doesn't work out the same way. On commodities, yeah, it's going to work out that way. On other situations, it's not. So when you're looking at oil going higher, it should actually be a negative on the economy, because it's going to be reflected in the price of gas at the end of the day. As always, if you're going to be a bull, don't chase. Wait for the pullback to below the 20 line. Okay, here we are looking at the Russell 2000 small cap index. This guy is still moving to the upside, has already pierced the uptrend line, so she can fall apart at any moment. You will also notice she is trending higher on the high points, the closes, while price activity on the slow stop activity, I should say, is actually flat to moving down. So there's no bullish confirmation of this bullish move to the upside, which leads me further to believe this thing is just a false rally, and we're going to show you in a minute how we know that. Okay, here we are looking at the S&P, same condition. You'll note here's your support, here's your big rally. Okay, now you're rallying higher, price activity not being confirmed by the slow stop, bearish divergence. You want to be shorting that. I'm going to wait and get myself some nice little entry opportunities. I'm already in here, and that's good for me at the moment. I'm going to watch this trend line here. If it gets above that, I'll probably add to it. Okay. Main thing I want to draw your attention to, let me clean that up, is this rally right here. Let me get the right tool. Okay, this whole thing is fake. As we've said before many times, whenever you're looking at the markets and maybe you're a bull and you're looking at it, you're saying, okay, I see this as being a rally. All right, well, if it's a rally, you can be able to go back and check it against the VIX. If it's a fake, you should be able to go back and check it against the VIX. Whichever whichever side of the coin you fall on, you should be able to go back to the VIX and confirm your analysis. If the analysis cannot be confirmed, you're wrong. So let's go check the VIX. Okay, like I've said before, the VIX runs the opposite of the overall market. So if the VIX is bullish, the overall market would be bearish, and vice versa. Okay, so if you've had from September, all of September, you've had this great big monster move in the major U.S. indexes, then you should see the VIX breaking down during that same time period. But it's not doing that. In fact, it's consolidating. Notice the tightening of the Bollinger Bands, okay? Right here, just more and more so. Whenever this happens, you expect price activity is consolidating, forming that support line. What's going to happen? Well, it's either going to break majorly to the upside or majorly to the downside. Well, for the VIX to break majorly to the upside, the overall markets have to break majorly to the downside. That's what I expect to happen. This is a bullish chart. All right, very bullish chart indeed. All right, moving down here. Okay, back here we got a bullish divergence telling you should be a buyer of the VIX. All right, which means a seller of the overall markets. The VIX is actually confirming my analysis to the T and actually warning of a major move to the downside here. That's what that consolidation is all about. If it wasn't consolidated, if you didn't have that consolidation beforehand, you get a bounce. Notice the wide Bollinger Band lines. In this case, you don't have that. You have, way down here, tight Bollinger Band lines, right here and here. This is telling you to look for a big move, okay? Now, if you were going to say you're going to look for a big move to the downside of the VIX, you got a problem with that. You've already overextended on your major indexes, so it could not support a major rally from that point higher. Couldn't do it. So what you end up with is, okay, what we've probably done is false rally to the upside, overextension. Now we're going to have to erase all of that and go lower. That makes more sense to me, and therefore my analysis would be justifying itself. Okay? Pretty cool, pretty simple. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Also, today I went and posted on our website at perfectstockalert.com 3 videos. They're about 20 minutes each, and they show you the perfect stock alert method of technical analysis. It's about a total of about an hour for you to watch them all, and they're free. Anybody in the world can watch them. They're all there on our website. But they show you step by step how I go through the process, how I go over the markets, why I do the markets, the way I do the market analysis, the whole thing. Then they go into the selection process and they get into the timing and the quality and all that stuff. So it's a really good free course there for everybody who's interested in that type of thing. Awesome. A quick look at our disclaimer. The disclaimer, read it and weep. God bless. Take care. Feel free to subscribe to our YouTube channel. I'd appreciate that support. It's free, and we'll just keep working our tail off for you. Thanks a lot. God bless. Take care.